President Emerson Mnangagwa of Zimbabwe has implemented capital controls in an effort to slow the currency's fast devaluation. Value of the Zimbabwean dollar has dropped by half this year, making it Africa's poorest performing currency. The president stated in a televised speech that banks have been told to suspend lending with immediate effect to minimize the generation of wide money that is prone to misuse for the purposes of manipulating the currency rate. Do those claims hold up? Joining us from Harare to make sense of this is Batanai Matsika, who's the head of research at Morgan&Co Investment Bank. Batanai, good afternoon. Thank you so much for joining us. On the suspension of third-party controls as far as foreign currency payments, can you help us make sense of this quote from the president? Let's take a look at it. It says the third-party foreign payments are susceptible to illicit financial flows, which prejudice the country of its hard-earned foreign currency resources. Is that factual?
Yes, to some extent, given, of course, what has been happening within the broader economy. You find that there's been a number of concerns around, externalization of foreign currency and issues to do with money laundering. So that's a way of trying to limit the outflow of the very much needed foreign currency in Zimbabwe. So that's a measure that the government is trying to put a hold on that.
All right. Now, what about the suspension of lending? We've got a list of measures that have been taken by the government. The government says expansion of broad money supply can be abused. Isn't there going to be an impact as far as suspending lending is concerned?
Yeah, there's going to be a negative impact, especially when you consider that businesses actually need credit for productivity and also to boost capacity utilization. So really in the short to medium term, we expect the country or GDP levels to actually come off, given that there's a lack of credit. But the concern there is about speculative lending. So you find that within the banking system, interest rates, we're looking at the bank policy rate of around 80%, whereas inflation has gone up to 100%, and also there are opportunities elsewhere on the parallel market, even on the stock market, where you can actually make more returns. So that the government is really trying to curtail speculative lending, but also is also trying to investigate some of the transactions that have been happening in the financial services sector.
All right. Speaking of the financial services sector, on the capital market side, the prohibition of inter-account transfers between clients and brokers, also the prohibition of third-party funding of client sub-accounts. If we go back to that previous list, how do these practices impact foreign exchange in Zimbabwe?
Okay, so the government has taken a stance to say that most of these transactions are finding their way on the parallel market, because with the deteriorating ZWL, what that means is that economic agents will always find ways of parking that money in US dollars, buying more USDs, and also pushing the parallel market rates up. So the expectation or the thinking there is that a lot of stock market trading activity was also being triggered by the need to preserve value, and a lot of economic agents would disinvest and buy US dollars. So that measure is trying to also put controls in terms of how transactions are happening on that market.
All right, you released a note recently following the speech. Will any of these measures work?
I think what will happen is that it will be a circuit breaker. So which means that in the short term, we'll see a lot of things cooling off. One, we expect the stock market to cool off, given the lack of liquidity and also an increase in the capital gains tax. We also expect parallel market rates to actually cool off currently, given there's a lot of uncertainty, and also given what is happening with the bank side. So in the short term, yes, we could see a cooling off, but it doesn't serve as a long-term measure to deal with the inflationary crisis in Zimbabwe. I think there's a confidence deficit within the broader economy that needs to be addressed through more stable and predictable policies that support things such as FDI and productivity.
Thanks. What do you make of I think you just mentioned it, the upward review of capital gains tax for shares that are held for 270, I think it's 40% from 20. What's the impact there?
So the impact is that, we're actually increasing trading costs. I think a concern for us is investment banks is that we need to attract our portfolio inflows, foreign portfolio inflows. We've seen that a lot of foreign investors have actually been divesting from our market. So those kind of measures also deter investors from participating on our market. So we're going to see a cooling off of trading activity in the short to medium term, but generally a loss of confidence amongst foreign investors.
I can imagine. 40%. Geez. Okay. Just away from the markets, the public transportation. There's a decision now to open up the public transportation sector to competition within a 12-month duty-free importation of vehicles, supposed to complement the ZUPCO, the Zimbabwe United Passenger Company, which I think has a monopoly up until this point. Can you help us? Is this going to make any changes? Because I understand there have been gridlock and lots of complaints about availability of buses and so on.
Yes. So what we're reading from all these measures, this statement, there's a lot of politicking that's also coming into play, and also risks that are emerging from a social unrest point of view. You find that the ZUPCO monopoly actually triggered a lot of issues to do with transportation and things like that. So the government is now trying to come up with some firefighting measures to say that let's now open up the market to more players so that they can address the crisis and also try and control some of the risks around the social unrest side of things.
All right. So I guess, Batanai, overall, we had you a couple of weeks ago when we were talking about the FX situation. Now the government has come up with what they term to be solutions. Overall, how do you see things playing out short-term, long-term, I guess, for the rest of this year?
Yeah, so we are concerned, especially on the GDP growth side of things. I think we're forecasting a growth rate of about 4% about, but definitely we're going to be sort of reviewing that downwards. We think that growth will be around 3%. We also expect, politics to take center stage and the economy will be adversely affected. We think these measures are just a circuit breaker, but there's going to be a lot of pressures on the exchange rate in the medium to long term. So 2022 and 2023, we don't expect a lot of growth in terms of GDP, and we expect some volatility, especially considering that we are already in election period.
Okay, and so very quickly, just a minute ago, is there a chance that the government reviews some of these or reverses any of these decisions if they don't work? Any idea how long they're going to give these measures to take place to see if they seep through the economy and take effect?
I think on the suspension of bank lending, I think that there's some news or sentiments that the RBZ would then come in and issue some directive to say that within the productive sector, maybe they should allow some form for funding. Because for an emerging economy or a developing nation like Zimbabwe to move on, we really need credit. And there's been an outcry by a lot of business leaders to say that there's need for that measure to be reviewed.
Fantastic. Batanai Matsika, Head of Research at Morgan&Co Investment Bank in Harare. Thank you so much for joining us. Appreciate your time.